Let's now talk about CESC, both in terms of demand at this point in time. What's the outlook? And if we can get an update from you on what's happening as far as Noida is concerned, what's happening with the Dhariwal and the Haldia IPP as well.
So that's again another space that's going well. So we are investing not only in distribution, but we are investing in generation as well. So right now, over the next 2 years, we are going to set up 3 gigawatts of renewables, which is hybrid between solar and wind. The projects are under execution right now. And this will go into our distribution networks in Calcutta, in Noida, in Rajasthan, in Maharashtra. So we will take them across our distribution networks. And so they're profitable, they're green, they're forward-looking, and they're margin enhancing. So it really works across all parameters. And it's something that we are very excited about. So this is the beginning in the green energy sector. 3 gigawatts to begin with, ultimately going up to 10.
Okay.
And we are looking actively at hydrogen electrolyzers. We're very inspired by the finance minister's talk on
the green energy transition.
Yeah, and the modular nuclear plants. And obviously that we understand is more futuristic, but it's something that we are looking at very keenly. And so there is a lot happening in that space. And the whole green energy part is being driven by Shashwat. I'm happy to say he's actually doing a way better job than I've ever done.
You know, you talked about modular nuclear, and this was part of the finance minister's budget speech as well, one of the budget announcements. I mean, you know, by when do you expect to formalize or finalize your decision to foray or get into this space?
So I think we are still waiting for the government announcements on the actual policy. It's the intent of allowing private sector that's been announced. So once the policy is announced, then we will actually formulate our entry into this whole space.
In terms of capacity addition, you know, as far as CESC is concerned, what should we expect between now and the 5-year target?
So 3 gigawatts over the next 2 years. I think another 2 in 2 years thereafter, and another 5 in 2 years thereafter. So in 6 years, about 10 gigawatts.
And the kind of investments that it would entail?
So it would be about 70,000 crores.
70,000 crores. Tariff rationalization, any indication, any plans on that front at this point?
So we've actually increased the fuel surcharge, which we are entitled to by law, in Calcutta last month. So it's the first time in 7 years we've actually looked at even recovering part of our costs. But that's a great initiative by the central government, which says that every quarter you actually just charge, and the regulatory commission will then examine your costs. And if you're off, you make corrections.
On the privatization of discoms, you know, any forward movement there, any indication?
So we do believe that a lot will happen, and we expect it to happen soon, but let it happen. We are still awaiting for the High Court judgment on the Chandigarh thing where we won the bid, and we are told now the matter will be heard quickly. So hopefully it'll get disposed of and we can take over Chandigarh. It's a very attractive city and an attractive zone, and we do believe a lot can be done there.
So, you know, finally, a big picture as far as CESC is concerned, both in terms of growth as well as the aspiration on profitability.
So as I said, 10 gigawatts by way of renewable energy, hydrogen electrolyzers, possibly nuclear. So that's at a strategic level. At a granular level, more on distribution, more efficiency on distribution, getting in cheaper power into your distribution zones to make them more profitable. So it's a combination.
Well, now let's talk about FMCG and the plan as far as FMCG is concerned. Where do you get confidence from on what is working for you on the FMCG side? And again, both in terms of investments, in terms of new forays, what is the plan at this point?
So the snacking part, the better for you snacking, is actually beginning to work. And we are now at about a 600 crore beat rate annually, which is going up every month. And at this level, we are beginning to see the losses coming down sharply.
Okay.
We don't yet make profits. We're not expected to make profits at this level. But we can see now the path to 1,000 crores, which is where we start to break even. So that foray is actually working well.
Well, when do you anticipate a break even for the FMCG business?
I think another 2 years.
And what kind of investments are we still talking about? Are you continuing to make investments?
You will look, yeah, we will continue to make investments. The losses now would be about 200 crores a year as opposed to 350. So that's a significant reduction. And there will be investments in capacity and products. But overall, I think it's something that's trending very well. Yes, we are 1 year behind what we had anticipated, but we're pretty much there.
So no pulling back on either investments or aspiration in terms of the portfolio mix?
Not at all.
So what would be the investment plan for FMCG as well as the products
FMCG doesn't take great investments in terms of capacities, because you can actually get third parties to manufacture for you. So it's a asset light model. So your investment really goes in terms of brand building, and which translates into losses till you get to a certain size.
Linked to that, let me also quickly ask you a question as far as the retail business is concerned and what we can expect for Spencer's. What would the expectation be there in terms of a quarterly run rate?
So I think the plan is, and we have to yet get there, is by the end of the year to get to a cash break even, which I think we are well on the path to doing. Nature's Basket continues to do very well, and that is where we are expanding the footprint.
Quick commerce, because that seems to be the current trend that is exciting, of course, the aggregators as well as the consumers. Is that something that you're looking at?
Yes, so we did take over a company which was in quick commerce. That's doing well, but we are not going crazy expanding, because the more you expand, the more you lose. The more you lose, the more cash flows you need. So we are balancing cash flow requirements with growth. So it's modulated.
So the growth expectations, the revenue expectations, and the investment plan for Spencer's.
So investment will be more in Nature's Basket at this point in time, where we are growing. So it's small. So there's not significant investment in retail, but yes, we do believe we will get to a break even in the next couple of quarters. So that's a very significant step forward. Once we get there, then we sit back, evaluate, and calibrate.
Okay, and finally, let me ask you about the ambition on the sports side. And we've of course been seeing you on television in the dugout as well, Mr. Goenka. But how has that bet panned out for you? And more importantly, are you willing to take bigger bets from here on?
Well, it's something that's been very successful. We got the franchise for 7,000 crores. We are reading that Gujarat Titans is getting sold for 12,500 crores. I don't know whether it's true or not, but that's what we read. And if that is indeed the case, then in 2.5 years, 7,000 becoming 12,500 is not bad at all.
So would you look at monetizing this in your franchise in any way?
No.
No plans at this point in time. Okay, Mr. Goenka, it's been an absolute pleasure. It's great to have you back on the channel to give us a very comprehensive view of the growth engines as well as the growth plans for each of your businesses over the next 5 years. Appreciate your time. Thanks very much.
Thank you so much, Shereen. Pleasure being here.
Well, with that, it is time for us to wrap up this CNBC TV18 special conversation. From all of us here on the team, goodbye and many thanks for watching.